Hey everybody, how we doing? Back with another dose of economic reality. And yes, things continue to get worse out there for the average consumer, for businesses, and we're not going to see anything turn around. We're seeing more rate hikes. Let's start off with that. We're also seeing an increase in bankruptcies. Both corporate and individual household filings are up, and they're up pretty significantly. We're going to talk about that here in more detail in just a few minutes. But first, the big news, what everybody's talking about, everyone in the business news sector anyway, I call it a sector, financial news, economy news, etc. The rate hike, 0.75%. Now, the interesting part is the Fed's not speaking about any future slowdown in hiking these rates. And we saw it in the markets today. The markets did not like what the Fed had to say. All major indexes in the red today. And by the way, it's Thursday, September 22nd, 2022. The big news, in my opinion, is this increase in the 10-year yield. And that means higher mortgage rates. We're now up to 3.7% on this 10-year yield. On the 10-year Treasury, the highest that we've seen since early 2010. So over a 12-year high. So think about that. Home prices now way above and beyond what we saw at the peak of the housing bubble in 2008, which peaked out around that time. Home prices much higher now. Cost of living much higher. The average debt much higher for households. But yet the mortgage rate now is the highest that we've seen in a long time, over 10 years. So this does not end well. This does not end well. The housing market's going to see more bigger corrections in the coming months. Of course, we do housing updates here where we talk just exclusively about home prices, inventory, sales data, and we'll present that in our next report. But just based on the numbers out today, higher mortgage rates are coming, the 10-year bond yield. So the powers that be, the money guys, they're letting rates rise. And that's a good thing because we need to see some of these bubbles pop. We need to see deflation in definitely many categories, including housing, automobiles. The problem is there's other categories where we're not going to see deflation. We're not going to see falling prices. That's the cost of food, the cost of energy. So it's going to be a battle for most people, including myself and probably a lot of you watching, budgeting and trying to keep your head above water, trying to stay out of debt or get out of debt. To everyone it's different. Maybe you're trying to get out of debt. Maybe you're out of debt. You're trying to stay out of debt. It's going to be difficult navigating this. And a lot of people are looking at car prices, looking at home prices, comparing these to rents, trying to figure out which way to go. So we're going to get into that more here as well. But let's talk about the bankruptcies. This is out of globalnewswire.com. Article just came out recently. Bankruptcy filings increase across all chapters. And these are the August numbers. Bankruptcy filings in August across all chapters totaled a 10% increase from August of 2021. Now that may not seem like a lot, a 10% increase, but look what happened just last month. Total filings, both commercial and individual, show an increase of 15% month over month. 15% just in 1 month. So we're starting to see what we talk about. We're starting to see this play out. The second half of this year, I've always said, was going to be the time period where things are going to become really, really noticeable. But first, let's think about this. A 15% increase month over month. What if that happens every month? You could be seeing a 30, 40, 50, 60% increase in bankruptcies. Would not be surprising, especially seeing these numbers, 15% just in 1 month. So again, both commercial and individual bankruptcies increasing. But think about the narrative that we've been told on the news, the business channels. And there was this kind of a buzz phrase out there. And that was, what was it? Economic recovery. Oh, we're in this economic recovery. Of course, we all saw the shutdowns and the closing down of the economy in 2020 with the health crisis, the health scare. But ever since then, what was the talking point in the news? The segments in the news, it was economic recovery, economic recovery. It was almost like it was put out there as a talking point that everybody had to just repeat over and over to make people believe that there is a recovery going on. Sure, there was a recovery for some people, but for most people, 7 out of 10 people are getting further and further and further into debt. So it's just amazing that they keep using these words, these buzzwords that I think they give people a false hope, false impression of what's really happening. Another recent article, auto loan delinquencies. And this one's out of Yahoo Finance. The 2021 automobile purchases are defaulting more than the vehicles bought in 2020, 19, and 18. So that tells us that these high vehicle prices that people went out and bought are already coming back to bite them, right? So people just getting loans here in the past year are defaulting more severely or more quickly now than the older ones back when prices were cheaper. It's these more recent loans that people are in the biggest trouble. Rising automobile delinquencies tell us what to expect with the economy. Yahoo Finance, just search for that if you guys are interested. Back to the rate cuts here. Rate hikes in the U.S., but some countries are cutting rates. Look at this. This, to me, is insane. Turkey cuts interest rates again as country struggles under 80% inflation. The people running things over there, they are saying that cutting interest rates is going to fight inflation. Just the opposite of what it should be. But that's what people have to live under now, right? So some goofball, some idiot makes a decision even though they have no idea what they're talking about. Kind of like here, we have these people that told us that, let's say, inflation was transitory, complete lie or complete mistake, whichever way you want to look at it. Either way, you still have to live under the consequences. These people in Turkey, I don't know what they're going to do. 80% inflation. Now, out walking the dog, I was talking to my neighbor just a few days ago. I bought a boat about 3 or 4 years ago, and he's now selling the boat. He used the boat twice a year. Twice a year, he used the boat. And this wasn't a huge boat, but even small boats can be expensive. But not just that, he had to pay to store this boat. Right? So these are the types of things that people are going to have to decide. What do you need in your life? What do you don't need in your life? And I hope you're in the position where you don't have to even think about those things. That means you're doing well financially. That means this economy, this cost of living is not really affecting you. But I read another statistic the other day. 1 out of 10 people consider themselves depressed. 1 out of 5 millennials consider themselves depressed. And a lot of it's money. You see, as debt climbs, these depression levels climb. More people on some sort of medication to help them out with this. And this is a very stressful thing for a lot of people. So we're going to be going into some very, very, I say interesting a lot. I use the word interesting. It's going to be some dark times for a lot of people. So I hope everyone's prepared. Now, people with less mouths to feed are going to find the easiest time getting through this, because of the cost of the food, the energy costs. Right? Also, back to the car delinquency thing for just a minute here. We see these delinquencies for people that bought cars just last year are exceeding previous years. It's looking like it's going to be the same thing for homes, because I was looking at the home ownership rate. The home ownership rate for the last month actually dropped. The home ownership rate dropped. That means a lot of these people that bought during the euphoria, during the FOMO, fear of missing out, when the health crisis came out, people went to work at home and more people bought homes because of that. A lot of people got called back into the office after that. They had to sell their home because of that. But two, I think it's because a lot of people became over leveraged, and a lot of people that bought their home even just recently here in the past couple of years are already selling their home. The home ownership rate is dropping. So that's an indicator of worse things to come. All right, let's wrap this up here. We've got some big bank CEOs testifying before Congress. And Congress, what they're supposed to do is hold their feet to the fire, ask them about monetary policy. And a lot of things came out about how Wells Fargo was opening up false accounts and things like that. They're kind of going after these guys a little bit, but not very much. At the end of the day, the solutions that are being implemented are making banks or encouraging banks to make it easier for people to take on debt. Now, this was a several-hour testimony that went on here recently. I didn't listen to the whole thing, but the part I did hear, they were talking to the Wells Fargo CEO. They were talking to Moynihan from Bank of America. Jamie Dimon, I didn't see that one, but here's the exchange between one of the CEOs and one of the select committee people. We need to make it easier for people to get loans. So the solution to high prices is making it easier for people to get loans. Is that a solution, or is that just going to prolong the problem or make the problem worse. When people can qualify for loans for things that they shouldn't be buying, that makes the problem worse. But here we have this shenanigans, this show going on where these people are supposed to be finding solutions, but the solutions that I heard from somebody on this committee to the bank CEOs: make it easier for people to get loans, make it easier for people to take on debt. That's the solution. That is actually the problem. That's their solution. Their solution is the problem. And we see this play out time and time again. The solutions are adding fuel to the fire. And now we've got record levels of debt, rising interest rates, mortgage rates over 10-year high. So it's going to continue to get crazier, more dangerous. I read an article, people getting robbed after they use the ATM is on a big uptick in several of the bigger cities. So be careful out there, because rising poverty, rising debt, more people are desperate, the more dangerous it gets. Keep your head on a swivel. Be careful out there. As always, keep stacking, everybody. Thanks for being here. Bye for now. Peace.